All right, so welcome back. So this is a continuation of the previous video. So this is what I was trying to explain, right? You can see that this particular inducement now is a valid one because what this is the load that created it. Shit. Network. The Starlink has not picked up. I was so scared the last video did not go through. It's currently being compressed now as I try to rush this video and complete it. So I'm going to send you guys like a video I did last year, a liquidity grab concept. Although it doesn't really, I've not really seen a lot of it today, but it's something you should also you may even want to know, right? And then some other liquidity videos I'm going to send you. That's excerpts from other classes, so that you can also like still watch and see if there are things that I missed, right? I can see if there are things I missed, the liquidity models and all that. The liquidity models and all that. But this is your video. This is the Chatopia Psychedelic 2.0 video. It's the most recent video that has the most recent knowledge. So if there are anything I skipped, it just simply means those things don't really apply to today's market. This network is actually bad. God, please. Ah. And this my recording studio needs network to work. Needs network to work. I'm having a headache. It's currently 9:35 p.m. and having like a very serious headache. I've been talking all day. That was why that video that did not go through pained me a lot because like I said a lot, I said a lot in that video and yet I was not able to manifest anything. So I think the network is back. I think the network is back. Oh, okay. All right. So I think the network is back. Okay. So this is what I was trying to explain now. So you can see that this particular inducement is it has every criteria. It has weeks. It took out the level that was created it. You can see it took out the level that created it, and then it was even a level that was previously used before. So which makes it empty. Because one thing about mitigation is that when price uses what when price uses what a level or a P of a point of interest, it becomes empty. There's gonna be what zero orders in that block. Can see this is the tweezer price rated on the tweezer, and then boom, price dropped. You would have if you were even very careful, you would have actually caught a trade and targeted here. So, but anyways, that's not what we're here for. So you can see that it shows all criteria valid. It was a previous level that was used. It's what had like rejection weeks confirming it the more, and price it was boom came into it, took it out, took or tagged the mitigation block and dropped. So inducements are that crucial and that simple. You can see an inducement here as well. Although this one did not really present with this one didn't really present with some weeks, but it's almost on the same level with the other one there. Didn't present with weeks, but can see this beautiful block and boom, this expansion. See this beautiful block, see the expansion, see the sweep, making it what a kind of protected level. It sweep, the expansion, the block, the source candle, very beautiful. Boom, we have a form of inducement, which is what a valid inducement as well. And we had what price coming to it, and then boom, go as high as that. All right, go as high as that. So this one too. Still a miss, right? That's why most persons I know who trade, they don't really consider other blocks or points of interest. They just mark out liquidity points and put their entries at the liquidity, because price would always come to take the liquidity out. Right? Price always comes to take the liquidity out. Okay, we explained this one in the last class, so it's almost still the same too. We explained this one in the last class. We have this, right? We have this, and then we have the what? Inducements. Anyways, let me go to GU so that I can be able to like see other things. And are there any previous drawings? Let me clear them off. Let's go to GU. Let us see GU, what GU has to offer for us. Right, so yep. So can see these rejection candles. These rejection candles are very powerful. When you see them near your POI, just know that they are inducements. Don't go and enter them. Don't go and enter them. Bikokwa. Right? Don't go and enter them. The price come down to the tweezer. So be careful about this tweezer when you're using it, because price can whine you and just miss your entry. There's only those who are looking for sniper that do that. So you can see this one. Very beautiful sell rejection candle, which confirms that okay, yes, this is what an inducement, and boom, price came into that level. Okay, so the same thing here. It just happens over and over again, and there's no changing that. It just happens to see this particular level broke. It broke. It is now a valid inducement, and it was a level that price used before. Because price has used it, it now became what's empty. You can see, and then price did what, took it out, and then came into this other block and sold. The other block was taken from a much lower perspective, hence you may not be able to see it. But I believe in one of the videos you would have seen the block that I picked. I'm on the 1 hour time frame, so you may not be able to tell which block did I pick. For those of you who might come with questions, just know I'm checkmating all of them. So literally see this one too. Induced, came into the other block. Right? Okay. The same thing, guys. Trading is simple. You guys, I told you guys, trading is very simple. See this break of structure. This is our entry. This block, right? This is our entry. You take your orders from the tweezer, if you did, or you took it from the full source candle. Right? Now, this is the inducement. You can see it's very close to the POI. This is the inducements, right? Did it check all criteria? There is presence of wicks, check. It is a valid inducement because it took out this level before it, the level that created its check, and it is a level that has been previously used by price. So price used it, therefore rendering it was empty, and boom, price came up and dropped. Crazy trade. If you are taking this trade, you would have been in for a lot of like money, because see, Goshi. It's like 4-hour trade. Very simple. Very. You will love it. Oh god. Whew. Good. I'm having a very serious headache. There's probably price reacted to a fair value gap here. Because this is past price action, you may not be able to see. My indicator may not be able to indicate it. If not, you would have seen it. Price reacted to a fair value gap there. And this was the inducement price used. It's also a valid inducement. So for every move in price, we sometimes expect inducements to occur. But one of the moves I don't really like wait for inducements is what is expansion type entries, because most times price doesn't even really like take note of inducements when price is gonna take those type of trades, right? Price doesn't really take note of inducements when price is gonna take those type of trades. So you can see that inducement is not a problem, liquidity is not a problem at all. What is your problem is understanding where what does price want to do, where is price going to, where does price want to react from, and where will it actually react to, not just inducement, liquidity, no, right? No. So as you actually move forward in the class, you're going to be seeing a lot of like things you can actually add to your trading, because I saw something I wanted to see, but I was like, no, let me just leave it until the class comes, right? You're going to be seeing a whole lot of things, how you can actually even trade confirmations, things you can see and say, okay, yes, price has mitigated this point of interest. Instead of waiting for price to still keep going for that, let me just strike from here. And a whole lot of things you can actually use towards, validate your setup. And I believe at the end of everything, you should actually find trading more easier or more simpler, right? All that is left is what? To fund and start executing. And the thing about trading is you actually learn more from execution, because the more mistakes you make, the more you learn. So if you shy away from trading, you would never learn anything. You would still remain an oludu. So never shy away from trading, because it is execution that actually teaches you a lot. Before I actually now forget, we're going to talk about engineered liquidity. Now, this one is really something. Engineered liquidity is basically a form of liquidity that price creates. By that I mean something like this. There was a time that I and my friend wanted to take a trade, and my battery is suffering. So it was something like this, right? And price just came into the block like this, right? There was no form of liquidity. Price came into the block and started going up. My friend was like BE. I'm like, nah, BEK. Price, when there is no liquidity here, and price came into your other block and started going up, and you want to BE, what will price use as liquidity? The what? Early sellers, or the early break even folks. And what price will do? Price will what? Look for a demand here, supply here, boom, react from drop, take out early sellers before the main move. This particular thing is what you call engineered liquidity. There is a need for price to create its own liquidity when there is an absence of liquidity around this area. That is why you can actually have price action like this, and then you see price do something like this. You see price do something like this, and then price just engineers, it induces itself before what? Boom, price goes up, right? Before price goes up. Let me show you one on GBP card. Favor, it surrounds me like a shield. Favor, it surrounds me like a shield. I think was it from here I marked out this thing, and was it this broker that doesn't like showing data? What's their name again? Forest.com. Very useless broker. Let me look for another broker. I think it was this one. Share this one like this one could share data like this. Favor, it surrounds me like a shield. Until the day. I'm trying to get the point where I marked out this thing from, and I pointed at those FEGs. Okay, so I think was it this point? Okay, this is our break of structure. That means our new low. Sorry, if it's not from here, then it was not this trade. Trying to see how, okay, it was not this trade. It was not this trade. Anyway, so this is what I'm trying to see. So you can see that now there is an expansion here, and you can see the FVGs, the buy FVGs. This particular one has been mitigated. This buy FVG has been mitigated. This is the only one. This one and this one has not been mitigated. But obviously, price may want to use, any of them. You never can tell whichever one. And you can see what price is because there's an absence of liquidity. Can you see how price was just going slowly grinding? And that was my alarm. And then these people who actually bought from here were induced, right? Price took it out and was fueled the move above. Now this is what an engineered liquidity, and there are opportunities to enter here, but I don't want to really go into that. But when we actually get to confirmation entries, you're going to see what I mean. There are opportunities to enter there. So just know that price is going to engineer liquidity if there is an absence of it, right? If there's an absence of it, price is going to be slowly grinding until it finally decides to pop. And when it pops, there must be something that has been induced before it popped. And it is going to be induced into an area of value, right? By that I mean whichever zone will serve as like the inducement is going to aid price towards be induced into an area of value. And you can see it was induced into the FVG, and price was boom, bought. It was paradoxical, it was crazy. It's crazy. So that's literally about engineered liquidity. Engineered liquidity is a form of liquidity that is most times created when price does not see any form of liquidity close to the point of interest. So it has to engineer its own liquidity and fuel the move. Literally, that is just it. So yup. Let me go down to the 15 minutes time frame and explain something for you guys. Look at this. Break. I'll be change. Confirmation. Inducement. And price was boom, sold. Chicken. And price was sold. Now you can see that this level has been used. Rendering it was empty. So nobody may actually even want to use this level. So this particular place becomes our inducement, and price took it out before the boom. Right? Price took it out before the boom. Now we have something is looking good here. This is first an FVG, which is also a potential point of interest. But this is consider this is an inducement, and it has been used. You can see. And this price action is efficient. When we get to efficient price action, you understand better. Price action is efficient. So leaving this particular place as what? An inducement, right? We may see price, although I'm not really interested in the GBP card. The pair just started misbehaving recently. We may see price come into this particular low before we have our buy continuations. So let me just so I'm either expecting price to get here or get here. If it violates this particular level, it's going to come straight to the FVG, react, and then go. So this is what I'm expecting overall, right? I'm either expecting price to do this, come into it, slow grind, boom, or I'm expecting price towards just plain out react from the FVG. Anyone is going to happen. So let me just screenshot it and see. not like I'm interested in trading it, except maybe I something touches my heart. I believe it has screenshotted. So literally that's what engineered liquidity is, guys. This has been a very very long video. It's been like almost 40 minutes video, buttressing and explaining what liquidity is. And trust me, it's not a problem. It's not a problem one bit. You just need to use your sense to know, okay, yes, this place is liquidity. But don't worry, when we actually do mitigation and other things, it's going to come slowly but surely, one by one. Everything's going to be what's making sense. Everything's going to make sense until you finally what's perfected your skill, and you're going to be what you're going to learn how to actually what trade the way I do. Yeah. So this Euro JPY trade. Okay, look at this trade now. This trade was stopped out. Look at this trade. Now, because of this expansion, I expected that price was going to react from this level. But look at what although I didn't really take this trade though, I just chatted it. I wanted to see something. Was it from here? Trying to find out where I marked, because this level was what price indicated to me that this level was what the indicator indicated that yes, price was going to use for this thing. Okay, I've seen my mistake. All right, so can you see it? That's what I was saying. This was the level that price indicated that that the indicator indicated that okay, there was so much volume here. But because I had already seen this expansion, I was like, okay, probably price will just react on the expansion and go up. I wanted to mark it out so that I can use it as an example picture for you guys when I am teaching you guys expansions or showing you guys more examples. So, but on this actually played out beautifully. It's played out beautifully. So this is the other block. Anyways, it may not even react from here at the end of the day. This is the other block that price took or price reacted from. So now, objectively, the best place to target is what? This high. Objectively, that's the best place to target, that high. Right? So price is going to actually what? Take out that high for what? New price action to continue. And voila, we'll see where we go from here. Anyways, like I said, we've spoken so much about liquidities. I'm even tired. We've spoken so much about liquidities. Let's see another one. They are everywhere in the chat. Incomplete pullback thing talked about. And boom. Favor. Although this is an entry model, I'm going to teach you guys that it's an entry model. There's a reason why price did not bounce from here, but bounced from here. I'll teach you guys all of that, because if I had seen this trade, I would have not treated it like a head and shoulder. There's a reason. Anyways, let me not jump into other things. When we actually get there, we'll understand better. So yeah, that is going to be all for liquidity. I'm going to also send other videos too that you can actually just watch and use that to piece together every other thing. Liquidity is like one of the easiest things, and I'm going to show you guys why. I'll see you all in the next video. Take care.